So one of the recommendations that came out of the Foresight Report was the need for greater standardisation. That's a foundation for automated computer trading. And yet there's a problem because the markets are fragmented in terms of their standards. There's a fixed standard for equity markets, but there's others for payments, for derivatives. So I did a report with Kevin Houstoun, which was about looking at standard setting in the capital markets. And there's a little bit of pointing out other industries do this better. So places like nuclear, aerospace, electrical engineering, they're kind of more organised on the way they do standards. They have more employees committed to developing them. So that was one point we were coming up with. We should be putting more resource into developing standards. And it's about having grown-up conversations where strategically industry puts its self-interest aside for different firms and says, okay, we're going to collaborate to make sure we've got the agreement on data and how to exchange it and what it means so that we can save costs and serve our customers efficiently across the board. It's happening a bit in financial services, but there's a long way to go. Well, particularly, a classic example is after the global financial crisis, there was a much greater demands on regulatory reporting, particularly around derivative instruments. They were thought to be at the heart of the problems of 2008. So there's been a huge requirement to put derivatives data into data repositories, but unfortunately the data, even today, is still a bit of a mess. So the regulators struggle to make sense of it. Even now it's hard for them to spot problems in the data that's been reported. So again, there's a huge need for standardized data in order to keep the system safe. It has, but it's slow progress. Actually, another thing I'd mention is the Bank of England and the FCA, they have a project at the moment called Transforming Regulatory Reporting, and that's actually particularly about exactly that point, that if banks kept their data in a consistent way, it would be much easier to spot risks in the different banks because we'd be looking at them, essentially be looking at the same animal but at different stages of in different situations, as opposed to look at completely different animals and we don't know how to compare them. My background is I've had an interest in cooperation and collaboration, standardisation across financial services more generally. So actually where I see it most prominent, one very prominent area is cross-border payments. There are huge problems today for many corridors, bilateral exchanges, where sending money, if you're from the Philippines and send money back home to your family as a migrant, you can lose a lot of your earnings in expensive cross. So that's not financial stability. That's just about efficiency and competitiveness and making sure that people get value for money. So yes, it's a financial stability concern, e.g. in derivative markets, prudential bank supervision, but it's actually even broader concern than that. I'm sort of understanding the way that technology is continuing to impact on trading. And we got many different dimensions of that. I think one that really stood out for me, which seems to be a tendency across more than one market, is that actually the technology, far from making markets more competitive, is actually giving greater market power to a few major banks, because the high costs of setting up the technology in order to trade do computerized trading is actually shrinking rather than expanding the market. And again, I think that's possibly something which better standard setting could address. But that was my biggest single takeaway, I think, from what I've heard today. We've clearly got to watch very carefully. I think the anxieties of some things we're less worried about. I think we've learnt to control flash crashes. That wasn't coming up as a major concern today. But there are other concerns about market composition and participation. Are retail investors getting good value for money? That's not obviously true. No, it's a perennial. We're going to be talking about technology and market outcomes for years to come. The world of finance continues to become increasingly international. And actually I think UK-based firms, UK-based regulators, they continue to engage very actively in international debate and international discussion. There may be opportunities for London, but I think the important thing is that that's going to come back through collaboration, not trying to go entirely our own way. I think that's a bit of a, in this field, I think that's what's the right word? It's a little bit of a chimera to think that we should be doing things completely independently.